more, with what's going on with the company and within Trio and how progress is going. You mentioned some fundraising, but maybe just give us a quick update. We can kind of go around the horn with a few of the other companies too.
Sure. Yeah. So from the Gentrio perspective, on the fundraising front, I had mentioned we're raising $3.5 million at a $12 million valuation. So a nice moving up in that regard. And then have some pretty good institutional investors, and then folks like other associated folks too that don't lead rounds that'll be joining. And we had a woman named Cindy Gillespie, who Bob knows, but we had worked with her in government, and she's joined as a Gentry advisor. She really is responsible for how all the states are doing like their healthcare and their plans, but she's really connected to the VC world as well. And so she's been a huge addition to us as a mentor and an advisor. So really lucky to have Cindy join. And then from a product perspective, one of the things that we introduced was something called the National Will Registry. So the National Will Registry, what most people don't know is that in the United States, when you pass away and your will goes to probate, it becomes public information. And in that will, which is the majority of what people, if you're not wealthy, you're probably doing a will. Really wealthy people are going to do things like irrevocable trust or even living trust. And we do the living trust. But for the first time ever now with technology, we're able to go and get that information. But you can see who's inheriting what. And so that's kind of really interesting everyone's talking about this great wealth transfer that we've all been anticipating for quite some time. But now using Gentrio, and the reason we have the digital vault, but now with this new technology, introducing the National Will Registry, taking it to the next step of, okay, well, now we know who's giving who what and when and all that good stuff. So it becomes this huge pile of information. And so that's where some of the things like Morgan Stanley and others that we've been working with and meeting with are very excited about all of that, because it was one thing to talk about who got the money, but we know where it's going. And so that's been a really cool project for us and helped us get to the next level. And then some of the new partnerships we did that are finally now, after like last year being painful, finally going live, like the Chubb things and stuff, being really kind of great to finally see like the things turning on.
So Renee, I have a question for you. I've been thinking about you because I'm seeing increased, maybe it's just because I'm focused on it, because I'm seeing ads for it. But there are other companies, I can't remember the name, Will and Legal.
No, Trust and Will.
Trust and Will.
So yeah, so please Google Trust and Will.
People trying to steal your idea, or what's
no. So Trust and Will, we all came out at about the same time, and so Google Trust and Will and click on all their ads, please. But it was really interesting because Trust and Will, they raised $50 million, and they do pretty much what we do. What they do is a lot more B2C. So they have partnerships with some of the banks and things, and they're like, oh, you can get a 10% discount to a Trust and Will membership. So they'll sell you like a trust or something for $650, whereas we bundle it in. And so the difference really for us has been that what we do is we have a 91% retention rate. So where you see us is we try to get built in, and then we stay with people across their lives, versus what they're trying to do. And this is where you do see them on TV a lot, or even they'll pop up in your little marketplace attached to your credit card. They're paying tons of money, and like even Comcast invested in them, but they didn't invest money. And this has been an interesting thing that we've seen, but they're like, we'll give you $5 million as an investment, but it's just an ad buy. So they can do things through like TV and radio and whatever it is. And so for us, like, we think that the longer term play is more around, like, we do these life inflection points, like, hey, you're having a baby, you're getting married, you're having something happen to you, because the majority of people don't wake up and say, today's the day I'm doing my will. What they do realize is like, oh my God, I'm about to have my first baby. And some of these people we've talked with, like, their world just changed, and they need these pathways of what we do. So then what we've done is partner with other people too, because then they're looking at a bundle of things like probably insurance at the same time that they're doing Gentrio, they're doing this. And this is where having those bundles makes a lot more sense than, seeing somebody on the Hallmark Channel be like, hey, do your will. It just doesn't. That's our thesis, is that, they've done a good job, but it's been a very expensive play.
So you're saying their cost of customer acquisition cost is really high,
Oh, it's
and
huge.
you're, if I understand you right, you're minimizing that by partnering. And is your go to market much closer, like aligned with an insurance company, or just tell us a little more?
Yeah, so we do a lot with like some of the people now that we've done partnerships with. Some turned out to be just a weird year, but like for instance, Gentrio is now built into checking and savings accounts. So for instance, like at different banks and then credit unions, usually smaller ones, but we have a partner called Strategy Core, and Strategy Core pays us $1.20 per year, whether or not someone ever even uses or touches Gentrio. We just get $1.20 for every membership they go out and sell. We just get money. And so the great part for us is that they have 14 sales guys that run across the US just selling this. And so each month we've been nicely seeing our amount of money that we come up, and we see some users, but not a ton. But it's all about how do you build that annual revenue that you just see every year? Because for as long as they have those checking and savings accounts, we just get built into that. And then we did some things with we're working on closing a deal with Assurant. So if anybody knows them, I need to, Kareem and I probably could celebrate holidays together at this point, but I need them to get the deal done. But that's like building us into credit card benefits and things. And so we think, and so we've done all this on like $1.4 million that we've raised, whereas they've done over 50 million. And so I'm sure they must have some insane valuation that I still don't understand. But the idea being that if you can get built into these products, then you don't really have to compete against some of those other folks. And so that's where we're talking to Capital One Ventures tomorrow for our second meeting, because what they're really excited about is how do we get built into more things like credit cards and become that digital vault, become those life inflection points. So that's how we kind of differentiated. But right now they trust and will, God bless them. They must have some crazy valuation. And
okay. So sorry, I uttered sounds like a dirty word when I mentioned their name, but anyway.
No. I've come to, no, because like everybody, this is me, because it's a wild experience, because a lot of the VCs, they come out of San Fran, so it's sort of good that you're out there. They're all like, oh, well, how are you going to compete with a trust and will? And we're like, well, let's see, I can show you in the profitability scale and how to, like, I get paid when people don't even use my product, and for them, you have to go through 100 clicks and ads.
Yeah.
So.
Well, I mean, I guess if you want to put the positive spin on that one, is at least they're helping to kind of define the market for you to some degree, and promoting the space.
You know what? That's Kim. That's a great way to put it, because that's exactly what happened yesterday, where we just did a big partnership with the main insurance credit union solution, like York Manufacturing just bought memberships for their employees today, and they're going out and selling it to all these different people. But they're like, wow, we heard about trust and will versus that. They're like, do you know what a bargain we're giving to our people and how they should feel so great about you? Because, oh my God. And we're like, thank you. And we're like, but we'll get you on the $50 every year. And the guy's like, but once you get in, you can't leave. And I'm like, we know that.
Well, maybe the last question, then we'll move it on to another one, but just about, so, I mean, how's the revenue picture going, and the financial health? I mean, and also maybe just tell us how you're doing on the round as well, and then we can move on to something else.
Yeah, so we have to finish on the round, kind of going backwards. We have to finish with the lead, but right now there's a group out of Atlanta, and there's a number of folks there that Cindy brought to us, and they'll probably end up leading the round at the $12 million valuation. I'm working really hard. I want the Capital One folks to come in, because I think that would be a huge part. So keep your fingers crossed. That's on Friday, the next one for that. And then there's a number of other folks too, like that don't lead, but like Alumni Ventures and folks. And then have another huge meeting with one of our advisors, Mike Welts, who runs Wasabi. He's a really great guy. The gentleman who used to, Jim Hawks, who did Eaton Vance, and he sold Eaton Vance to Charles Schwab. So he's interested. We're just trying to figure out, get the blessing from his son-in-law.
Right.
So, but he would be good too, because of the Morgan Stanley connections in the world on that. And then hopefully this year we'll clear around 2 million in revenue.
Okay. Well, good. Well, thanks for the update. That's great.
Awesome.
Looks like Chris is going to be joining shortly, but I was going to say, sorry, some questions for Renee?
Just Renee, there's a lot of famous VC firms out there, but on the less famous one in particular, have you spoken to Proven Capital, Pruven?
No.
Okay, you can shoot me an email if you want, lylan@lylan.com.
Yeah, that'd be great.
I did the Kaufman Fellows program, and there's several people in the team there that worked previously in the corporate venture group of one of the big banks. I forget which one. And so they're connected in the whole sector
Oh,
too.
yeah, that'd be great. So,
Yeah.
but thank you. I appreciate that.
Awesome. All right. Well, thanks, Renee, and good luck on the raise.
Thanks.
Maybe Sarup, you want to give us an update on Senso and just maybe talk a little bit about the pivot and what you're doing?
Yeah, absolutely. Happy to. I'll be quick, and I'll just talk about a little bit about what's been going on over the last year. So, just to give everyone sort of a reset on what we started out doing in 2018. We built a mortgage retention score for big banks in Canada. So RBC, Bank of Montreal were customers. TransUnion was a customer. The product basically predicted when customers of a bank were going to churn on their mortgage, so they could do proactive outreach to retain them. The product worked great, and there was huge demand for that product in a ZIRP environment. But as interest rates rose and people stopped refinancing and purchasing homes, essentially we went from about $1 million in ARR to zero in what felt like a day, because all the banks renew in between October and November. So literally on that day, October 31st, November 1st, all of our customers were reallocating budget, and we went from about 30 people in literally 10, 15 days, and Chris was in the mix of this. We had to lay off quite a few people. We went from 30 to 2. And on the same month, November 2022, ChatGPT launched. And just as fate would have it, this was pure luck. I must have received 15 emails from bank and credit union executives in the US wanting to kind of fly me down and teach them about generative AI, just because we've been doing it for so long. So I did. And I got a whole lot of insight from those speaking engagements. I ended up doing 55 last year. But it was pretty obvious to me in the first quarter of last year what we needed to build as part of the pivot. And, Chris and the rest of the board were hugely supportive in us pivoting the company and not shutting down. So my co-founder and I rebuilt a new product over the summer. We were able to sign 5 customers without the product in place. So quickly, we went from 0 in ARR to almost 200K in ARR. Worked with those customers in Q4 of last year to kind of really fine tune the experience and everything. But Q4 last year, we could not raise capital at all. I must have had over 200 investor meetings, and everybody looked at the cap table and they were like, nope, not going to have it. But what happened was YC, I threw in a YC application last summer, and YC came along and they looked at our situation and they were like, all right, if you restructure the company, we'll admit you. And we were at the brink of sort of having to shut the company down, and couldn't have done this without Chris and Luge and the rest of the board. But we successfully restructured the company, got into YC, and we just finished YC. We started the year, as I said, about 200K in ARR. We've doubled since then, so we're almost at 400K. We'll be at $500,000 in ARR this month. And yeah, really excited about the product we're building. Essentially, the focus right now is really kind of in the banking industry in the US, mainly sub 5 billion in assets, and really enabling customer support staff in branch and in call center retrieve information from policies, procedures, and user guides in a much easier way. We've been able to reduce call center time and branch time from about 15 minutes on average to 3, so 5x improvement. And our customers are just loving it. And average ACV started at about 40, 50K. We're at about 70 to 80K right now. So 3 of our customers have expanded. We've been cash positive, so we haven't really touched YC's money at all because all our customers pay up front. And really just managing the business prudently. We've just raised just over $1 million post YC, getting quite a bit of investor interest as well, and just growing the business now, hiring back. My former staff are all reaching out to me post demo day saying, we want to work for you again. So I'm hiring a bunch of the best people on board and just continuing to grow and excited about the future.
Awesome. Nice, like I said, nice recovery, nice pivot. And
yeah,
And I know when you talk about restructuring, I assume that's a recap and all that kind of stuff. So it's like it's tough to go through, but good on you. Anyway, Chris, I see you're on, so throw it back over to you, pal.
Sorry, my machine rebooted on me just as I was signing on, so it was like inevitable. So Kim, thanks for the soft shoe, and Renee, great to hear the update. And then Sarup's going to be, as ever, a little bit modest, but not only did they get into YC on demo day, they were selected by TechCrunch as one of the top 18 companies coming out of Y Combinator right now. So just a really, obviously things in AI are very hot, but I think, just a great business that he's building here, and, great product market fit and nice acceleration, and a nice up round for our investors. So Bill and John will be happy in particular to hear that the capital that they're raising coming out of Y Combinator is at a nice step up from our cost basis. So Sarup, thank you so much for being so tenacious when we have these conversations. It's very, very hard to do what our founders do, and it's never a straight line, and there's lots of ups and downs, and what you did in terms of kind of navigating through that. One of the most tenacious founders I've ever met, which is the reason why we invested in him in the first place. Like, Sarup will figure it out. That much I know. So, and has. So I just want to recognize that. Any questions for Sarup before we kind of do a quick update? And Sarup is raising and looking for strategic investors alongside. I don't know, Sarup, if you want to kind of highlight the type of investors you're looking for, in case Wyland or others have ideas for you.
Yeah, most of the investors I've been speaking with are Silicon Valley based. So I've been speaking with Proven today, actually. Got a lot of outreach from the YC community, but always looking for really strategic people across, like, different geographies, different industries. Banking, credit union obviously makes sense for us. Canada, most of our investors are anchored in Silicon Valley, which is great, but like diversity is really important to me. So always looking for good intros to good people.
Okay, I'm just going to jump in here. All right, everybody can see that okay?
Looks good.
Awesome. Okay, so try to be efficient with time. Again, apologies for the late start. So believe it or not, this is our 20th call. So just want to mark that milestone. So really going to talk about sort of our outlook, first half of 24, what we're seeing, and a couple of updates on the fund. In terms of the broader market, what we're seeing is VC deal making and fundraising is kind of coming back to a normal cycle, if we can say that. So in terms of the valuations in particular, I think we're sort of in a pretty reasonable cycle of risk reward and pricing. Although I would say for companies, it's still challenging to raise in this environment, and there's still really not much liquidity on the backside. So really seeing this as a big change year. So the big one is AI continues to be, the big engine, and we're fortunate to have a number of companies in the portfolio that are really taking advantage of that driver in terms of driving their business. I think everyone's pretty familiar with sort of the challenges with Fed and interest rates, which is really the thing that's stopping any meaningful IPO market. We were with the head of tech banking for JP Morgan in San Francisco a couple of weeks ago, and we really don't expect more than 15 to 20 IPOs at most to get out this year. And the profile of those businesses are really closer to 400 million in revenue with strong growth, with or at close to profitability. To say the obvious, the issues with the war in Europe, China, Russia, we're in a sort of a very different geopolitical era. from a risk-on point of view. And unfortunately, since we spoke last, now very significant challenges in Israel and the Middle East. Our portfolio is just in North America, so we don't have any direct risk of our companies, in terms of those markets, but it does affect, the markets that they're able to sell into. And so really just focused on driving off of the US market from a growth point of view. Any questions on any of that? So ongoing macro uncertainty is still a big issue. Mass startup extinction, which I'm really pleased to say all of our companies survived. From 2021 point of view, but it was a pretty tough environment for early stage companies to get through and the fundraising challenges. And it's not completely gone away, but just want to recognize again, founders like Sarup that kind of, powered through that and made it to the other side. There's definitely a flight to quality in that market. This continues, and then compression of valuations. So you got a lot of companies looking to raise money, not too many VCs that are putting money out aggressively, and so valuations, I think, have certainly come down to be reflective of that. The notable exception being in AI in terms of the number of companies that are moving and the speed at which they're moving. Had recent meetings with both the OpenAI team and the Cohere team, and definitely come to the conclusion this is the biggest technology wave I've ever seen in my career, and much bigger than what we saw with either the initial internet boom in the late 90s or the movement to mobile or cloud. So really all of those combined, we think it's going to be bigger than all of those. So in terms of where are we relative to that change, again, with ChatGPT-4 out now, for those who are familiar with or fortunate to have been investors in NVIDIA, one of the big constraints right now is on compute. So these LLMs, in terms of the models, I think are really starting to have really big economic benefit. And I think, Sarup's example is a great one for the credit unions. Training those models is really where most of the compute volume was, and we're just shifting from training to inference, meaning production. And so I think the last number we saw earlier today was around 40% of the compute capacity is now in inference. So said differently, until recently, 90% of the compute that was training AI models was not visible for any business benefit or to any outcome. We're now seeing that shift to about 40% of the compute is being leveraged for business benefit, and is doubling every 4 months. So the amount of compute is going up at a pretty interesting pace. In terms of companies, in terms of our vintage, so we're really, we invested, just as a reminder, in the classes. So this is a graph on the class of 2008 to 2010. So of the, a little over 1,000 companies that seed finance, only 51 ultimately got out of those 1,000 companies from 2008 to 2010 got to ultimate growth and exit, and so different paths along the way. So it's a marathon to go from early stage to late, and really years 2 to year 6 can be the hardest. And so our vintage in the Breakaway Growth portfolio is 2018 to 2020. So just as a reminder, we're not doing any net new investments, but we are investing follow on selectively. And so we're still in that zone of 2 to 6 and not quite out of the woods yet, but getting close. In terms of the portfolio, dollar weighted revenues, just under 23 million, growth sitting at just under 13%, gross margins at 26.6, runway of 14.3 months, and capital efficiency of 3.2. Averages always, even dollar weighted averages can be influenced in a portfolio of this size by one or two companies. And in this case, we are being influenced in terms of bringing down, especially gross margin number by Elroy Air. Elroy's doing really well, and we'll talk a little bit about that and maybe bring Kim in to do an update. But because they're very early on in building their systems, they really don't have gross margin on the early low volume systems. And so that's just pulling the gross margins down on the overall portfolio. In terms of the total value of the portfolio versus what we've invested, we're sitting at 1.73. Right now, we've had 11 up rounds in the portfolio, 3 down, and 4 exits. And I can do a quick summary on some of that. Game Club, for those that were in Game Club, we've now fully exited that position. And again, much appreciation to Dan, another very tricky situation, and working very hard to make sure that all of our investors received their capital back. Senso, as I mentioned earlier, Sharoop, I just can't stop saying how awesome it is where you've ended up the end of this year versus where you started the year. And so to be selected in the top 18 to get into YC is very, very difficult. To be selected in the top 18 companies coming out by TechCrunch, pretty awesome. We've done a follow-on investment in Flyer, and we can maybe, Kim, if you're able to talk a little bit about what's going on there, why we're excited by it. And then lastly, we're doing the transition from our fund admin that was in Salt Lake that went under, Assure, and moving over to Carta, and expect to have that completed in September. And then just a couple of quick, company updates. I think on the top right, Elroy Air hit a very important milestone since we spoke last. So they've had their first autonomous flight. So think about that as sort of Kitty Hawk and the first flight of an airplane, but it's a pretty amazing feat. And it's the only autonomous hybrid electric drone that's been able to hit that milestone. So really pleased to see them continue to lead in that space. Think again.
Did you want me to fill in any blanks?
Yeah, why don't you jump in right there? Go ahead.
Yeah, sure. Let's save your breath for a second. Yeah, Elroy, I've had a lot of involvement with them since the beginning of 2020. Led a few SPVs on them, and so I'm pretty close to the CEO and what's going on there. Look, this is a long run, as Chris just said. It's the first of its kind. It's a hybrid electric and propulsion. The benefit of that versus when you see in the news things like Joby and some of these other electric VTOLs is electric is limited in terms of its distance. What Elroy is able to do is basically fly 500 miles and carry 300 pounds of cargo, and it will be autonomous. And the market fit for that makes them somewhat unique, particularly in military and logistics companies. And that's why people like FedEx are interested in them and have publicly said they're investing in trials because the distance is the important thing. So they have basically $3 billion in, shall we call them, provisional orders, meaning when they deliver the plane the way they say they're going to, they have $3 million of, we'll call them conditional orders, lined up to do that from folks like FedEx and others. The military is all over them. And the good news we just found out a couple of weeks ago is the latest U.S. defense budget that just got approved, an $800 billion budget, has a number of different projects identified in there specifically for Elroy Air. One of them in particular, they wrote for the government, and it got approved. And it's $23 million to run some projects. So, it's going to be continuous testing and testing and testing and testing, but they have got the bird up in the air. And so we remain optimistic. Last comment on it is the CEO's done a really nice job of bringing in advisors and board members who are heavy influencers, a lot of military people, including Mark Esper, the former Department of Defense Minister, HR McMaster. Folks like these are investors and on the board and are providing tremendous, shall we say, networking inside the government right now. So I'll leave it at that one. Chris, unless you had anything more. Oh, and they just raised it around, and it's nominally, look, like a lot of other companies, valuations are taking a bit of a hit. So we were able to get something favorable for the group, and that is that while it's nominally about a $260 million valuation, in essence, we're able to double down it and put in some money and essentially get it at an effective rate of 133 million by getting additional warrants. So they're playing that game, as a lot of companies do right now, to make it attractive for investors to continue to commit.
And I think the other, not to bear that headline, but I remember Dave saying now the back orders for Elroy are how much?
3 billion, 3.1 billion. That's
So
billion with a B. Yeah.
With a B. So this is probably the biggest sort of moonshot in the portfolio, but very, very interesting company. Continues to do great traction. I'll hit a couple other quick highlights here. So moving across top left to right. We talked about, so this is the TechCrunch article about Senso. Again, Sarup, congrats, a very, very big deal. Michael Sissions, CEO of and founder of CareerList, continues to get a lot of ink in New York in terms of the hiring market, and their business is stabilized nicely now that the hiring environment seems to be clearer. SignalWire, just launched, so we're all on their platform. As a reminder, just launched their no-code builder, setting a new arc on voice AI. So really interesting developments from SignalWire in terms of what they're doing around AI in voice. And they've been at that for a while, but nice to kind of see that those features start to materialize in the product. Flyer, which is center bottom. This was a pretty quiet announcement, but if you remember, Flyer is basically the AI engine for pricing and yield management for the airlines, and has continued to knock down bigger and bigger long-term deals. And again, let Kim jump in here if you want, but excited about our ability to invest more in this company at a pretty attractive price given the environment. But the one thing I did note in terms of opening up of TAM, their platform now being used in hospitality in hotels in terms of helping them price rooms on a real-time basis. So that really opens up the TAM.
Yeah, the only thing I add is the CEO has been very aggressive about fundraising and really making this a very, very large company, raising money to do acquisitions, expanding from just revenue management and revenue yield improvement to a broader set of tools for the airlines and reservations and whatnot. They're really basically looking to disintermediate the old Sabre systems that have been out there for a long time with next generation stuff. And they can basically walk into an airline and show that they can improve yields by about 7%, which is, when you're talking about 7% on billions of dollars, it's a big number. Yeah, I think that's probably enough. But yeah, real, very strong AI technology that they're leveraging very well, and hiring in some great talent.
Last one, just lest you think like everything's sun and roses always at Breakaway Growth. Portfolio companies do have challenges, do face issues, and unfortunately, the FTC cracked down on in-market. So if you remember, in-market's probably one of the most mature businesses that we have in the portfolio, over 100 million in revenue, cash flowing and profitable, and we're hopeful that they could be an IPO candidate in 2025. But right now we've got a bit of a cloud hanging over the company with the FTC basically putting some pressure on them as it relates to how their data aggregating and selling that data on a location basis. The company feels confident that they're going to be able to get through that issue thoughtfully, but that is a challenge that end market's got right now. Outlook, again, markets continue to have some uncertainty. We've got some really nice examples in the portfolio of what we're calling applied AI. So these are not PowerPoints and ideas, but actually whether or not we're talking about Flyer or Senso or SignalWire, real value-based and business impacting applied AI in these businesses, and they're seeing that continue to materialize in the business. We're getting to a maturation stage as we'd expect in the portfolios for some nice signs. I think we've gotten through sort of the what normally is the toughest part of a J curve as the portfolio matures, and we've got some companies that we think can drive significant value over time, and sort of excited about the progress. And our next call will be in 6 months from now, so I guess that would put us in probably early September, Meryl. And then we've got a little bit of data here, so if you can just update that.
Yep.
I will stop sharing. So any questions on any of that, or other thoughts?
Hey, Chris, I was just going to say, you mentioned the bad news on in market in terms of the
FTC,
but how is their business doing otherwise in terms of revenue growth and?
Yeah, great. Yeah, no slowdown. So we just got the quarterly results. They're ahead of plan on both revenue, EBITDA, and cash flow. So business continues to be pretty robust. So they've got some inbound interest on the M&A side that they've so far kept at a distance, and are still thinking about an IPO in 25 as sort of the most likely window where I think companies of their size, scale, and their market fit, I don't think they'll be getting out this calendar year. But I do think if the cohort of companies that is going out the end of this year performs strongly, and God forbid we have something else negative happen, hopefully the markets remain strong and open in 25. Got this silly presidential election behind us, Mr. Austin.
You're looking at the wrong guy on that.
Just get it over with, man.
I will tell you, the only thing coming from this down in this part of the world, the big issue that people are focusing on is, while all this AI is driving lots of efficiencies, it's also, as you undoubtedly have read, is driving the need for energy through the roof.
Yep.
So, as they say, brace yourself. We see it here in spades as to the energy demands. Forget whether you're a greenie or not. Boy, I tell you what, the need for energy is vast and growing.
Mm.
Yeah, no doubt about it. It's to take an LLM with a business use case that makes sense out of testing, where most of them are, into production, into inference, is about a 10x increase in compute need.
Yeah.
So yeah, we've got a big ride up the roller coaster ahead of us.
Well, the other issue is, if you look at some of the growth characteristics that are going on in Texas, the chip space, what Samsung is doing just north of Austin is shockingly large, and more to come. Same thing all around Austin, from San Antonio, Austin to Dallas. the growth is quite amazing. And when you look at companies that are relocating to the United States, a lot of Europe is being deindustrialized. A lot of that stuff is coming to the United States because I'm a broken record, but energy. You cannot run the businesses that have historically been run in Europe, whether it's making glass or steel or you can't run there anymore. So nobody likes saying it, but it's a lot of that stuff is coming this way, and the energy needs are pretty dramatic.
I was in DC last week, and just kind of reinforcing what you're saying is like, where, as many of us worry about sort of the troubles or the challenges, that the U.S. is facing compared to other places on the planet, it's pretty damn stable, right? So where else can you find a single market of, 400 million people with a, business-oriented way of getting things built, and it stands alone right now without the geopolitical as much as we love to talk about what's happening in a courtroom here or there in Johnstown. Makes for good entertainment for John, I'm sure, in New York. But I think the country will come through this pretty strongly, is our view. And next year we'll be out of the silly season and back to building again.
I agree with that.
Yeah, I was with the team from Columbus, also in DC last week, and Bill, to echo your point on the semi side, they've got $7.5 billion of fabs being built in Columbus, Ohio. So it's right across the country. It's not just in Texas.
Oh, of course, but you ought to see what these locations look like. I mean, they're I would say small cities. They're large cities that are being built. It's wow. That's all I can say. Wow.
Leland, John, any thoughts from New York? Speaking of,
no, I'm staying out of all that stuff. A little ugly here, but at least spring has arrived. And in my world, hopefully, home sales pick up and people start buying more furniture. But it's all good so far.
On the power side, probably around 2 years ago, a friend of mine who was the consul general for the province of Quebec here in New York, her big project was to get New York State to purchase a lot of its power from the province of Quebec. And then she accomplished it. She got the deal signed, and then she resigned from the job. Right? She had one goal in mind, and she got it done. So it's good to see a lot of deals also being done where the power rich can share and sell to the ones that need it.
Yeah.
All right. Well, with no other questions, Kim, thank you for pitch hitting, and Renee also for giving us the update. And Renee, we're going to be circling back with you on the financing, but and I think you got connected with Leland on his intro, or you guys are going to do that separately?
I already shot him an email.
Right on. Awesome. All right. We'll see everybody in 6 months. Be well. And I heard the word summer on the radio yesterday, so like maybe, just maybe.
Almost here, man. Almost here.
All right. See you, everybody.
Yeah. Bye.
Bye.